Hey, Rent Retires. It's Adam Schroeder here with another episode, joined as usual by Zach Lemaster, the founder and CEO of Rent Retirement. And we are pleased to be joined today by one of our investors, that is Alex. Alex, thanks for joining us today.
Yeah, glad to be here with you guys. Thanks for your work.
Absolutely. So let's go back to your first deal. I mean, a lot of times when we have guests on, we go back to how they started their company and real estate and all of that. But tell us about how you started thinking that real estate might be something for you and kind of how you started wading into the waters.
Yeah, well, one of the interesting things is I'm actually the third generation real estate investor. So as a kid, I would go to Florida. This was a vacation, and I would go with my grandmother, who was a brilliant entrepreneur, a single woman who really made her way in real estate. She saw Florida and all the potential of that before it really was going. And as a single woman, she retired off of her rentals. And I would go down there and I would mow lawns and paint houses and do all the things. And in fact, one time I can remember saying to my grandmother, I was 12 years old, maybe, I'm painting this house. I said, Grandma, you should be paying us for this probably. And he said, what are you talking about? I said, we're painting your house. She said, you're painting your house. And you know what? I didn't even think about that till 40 years later. Like, but in her mind, she was already thinking along some of the generational wealth. So my grandmother started in that. And then my aunts and uncles, my father, all got some little bit of generational wealth, a couple of houses to start with. Kind of our philosophy is enough for seed, but not enough to sit around. So, so you have something to start with and be motivated by and something you can build. So seed for the farm, but you're not, getting handed a bank. Because, I mean, if you study generational wealth among, people who have too much, it's a demotivator. So, and actually I watched this kind of transpire throughout my lifetime. My dad was the one who built what he was given. One of my aunts said, I can't do this because, again, this is that, it's hard managing your properties, especially you think back in the 70s and 80s. You're remote. My grandmother was on the ground. Now her kids were trying to do this remotely. And so 2 of the 3 sold out and did some other things with that resource. My dad built it. And then I got re-recruited in because my dad had a lot of health problems, and my mom did not love the real estate, and partially because of how they manage that in their relationship. I think that's been part of the growing and learning for me is, there's 2 sides to the difficulties and the benefits, and she would have sold them. So I just said to my dad, I got to have all the management of this. Or else my mom's going to sell it off. So I ended up running the business from maybe 09, 10, managing the finances and slowly starting to manage the real estate. And then I was going to buy my own. And this is more information, but this is how people live their lives. My goal was to help manage the resources for my mom. And so she had a clear path of retirement and not worry about those things. She ended up passing suddenly. We always thought she'd live for 20 more years. I thought she'd still be around. And then I helped my dad put some things in order. And he and I were about to buy the next kind of properties because for a long time he kept it on hold because of the tension with my mom. And now he was getting excited again about it in 2017, 18. But then he had some health issues and he passed. So I've been saving, but he wanted to do some things together. So I ended up saving up a little bit. And then I bought my first one after that. But I started with a couple that were in pretty bad distress because back to why you need a team. He had his cousin kind of managing those, and this is all weird. But and she was not managing those. So I brought in a property management team probably in 17, and slowly started improving those properties, but they were pretty significantly distressed. And even when we kind of received some of that generational wealth, they were pretty distressed. So they required a lot of reinvestment.
Nearly 40 million lawsuits are filed every year in the U.S. For real estate investors, one lawsuit could put your entire portfolio at risk. That's why we turn to Nevada Corporate Headquarters, the experts who help us protect assets and reduce taxes. With over 35 years of experience and 17,000 five-star reviews, Nevada Corporate Headquarters makes it easy to manage properties across states, navigate tax laws, and protect your assets with the Wyoming LLC. Don't leave your investments exposed. Visit nchinc.com/RTR to schedule a free asset protection and tax consultation. Plus, receive a free guide to safeguarding your assets.
What a story, Alex. Thank you for going through that. You're someone who's been around real estate your whole life to some degree because of this. We're going to have to quote your grandmother, by the way, because I think that's probably one of the best quotes I've ever heard. Like, just having the kids do the work, and what do you mean? You're painting your house. I mean, just to put things in perspective. Like,
and 12-year-old you's like, no,
don't care. But that is so beautiful, because I think it's like in so many different ways, right? You're in there like we're developing some work ethic, and maybe just that's a little bit of a mind shift change, or like you said, maybe you didn't really realize it until later. But I'll have to use that one. That's really good.
You got to get your hands dirty too, right?
Yeah.
Sweat equity. And for us, it was like, that was vacation. We would go work half a day on her properties, and then we get to go to the beach, and we get ice cream or something at night. It's like, this is the best vacation ever. I didn't know any different.
I love it. So you at least have the ability to, or I guess you have the experience. You kind of have been through based on your grandmother's initiative, which is awesome. I love your story, but initiative to start the rental process. I mean, talk to us about the mindset as you were getting older, continually seeing these, like, I guess out of necessity, you had to get a little bit more involved and hands-on later in life with some of the rentals that maybe started with your grandmother or past your parents. But I'm just curious to know, like, was it very apparent early on that real estate was an asset that was, or you just didn't know any different? I mean, talk to me about the mindset of owning real estate over time. Is that something you thought you wanted to continue? You clearly did. But I'm just curious about how you thought about real estate and money maybe growing up, if you could share more on that.
Yeah, thanks for asking that, Zach. So I mean, here's the sunshine and the clouds, right? So kind of so I've been a pastor for many years, and actually have lived pretty simply, and I was involved in serving kind of my mom in this, but I wasn't thinking much beyond that, because I think one of the things that happens to people, and I saw this in my family, and I saw a transition, is too many people, and this is the financial freedom issue, people are so focused on what to live with that they don't spend any time thinking what they're living for. And so, yeah, you can acquire things, and that's great, but we all know you have a calling, you have a purpose, you have and are you doing that? And is actually the real estate facilitating that? So not to tangent too much. So money could be in my mind kind of like we call it an idol, just this thing that was maybe too emphasized. It was all about making the money and grinding it out. And, come from that Irish Catholic immigrant roots. And so, the work ethic is the beautiful part, but sometimes you can get too consumed with the money. I think my mom and dad were very service oriented. And so he really balanced that out. And the older he got, the better he got. I mean, he was a model for me. He said, I want to make a little money every day, and I want to make a difference in someone's life every day. He goes, if that's a good day to me, I want to serve the Lord, and I want to make some money. And he was very generous, and one of the most generous people I know. And so I grew up in that, and I was thinking, I don't want to get overly attached. I feel like that's been something in my family. But when I had to re-immerse myself in it, one is I've lived pretty simply in ministry or as a pastor, and I thought, my retirement trajectory, where I have options to choose, is that, if you have a pulse, you have a purpose. So retirement is in some ways, it's when am I free to choose how I use my time to do the good things I believe I'm meant to do, whether or not I get paid for that or not? And that's what the real estate facilitates for me. So as I was re-immersing myself, I thought, Dad, so I'm a systems guy. I think about all the ways things, what's the formula, right? And I said, there's a whole way we could reorganize the business here that you'll yield, profit, you'll do better. People will be served better. They'll have better houses, and you're not getting all the headaches, with the property management team, acquisitions team, accounting, all those kinds of pieces, right? And so we started putting those pieces together, but we were doing it kind of a little bit too much on our own. So I was reading books. I was learning from people who were doing it. I thought, how am I going to set this up for my mom? And so bigger pockets and some of those things. And not to over promote you guys, but the beauty, the advantage to me being on here is I've done enough of the grindy side of this that you guys are like, the thing I found with Rent to Retirement, I'll just give you some props here, is you package the whole deal. So it's like, oh, acquisitions, good. So I've bought properties and some distressed, and like many of us, then you find out later, oh, there's a whole another set of issues I didn't know about. I bought a property from my friend Steve with you guys. All the 4-point inspection, the roof, the mechanicals, it's all redone. It's all good to go. So you're starting with something, and you're not going to have any big hidden expenses, and you're starting off where there's good, reasonable cash flow in the early stages of that. So I learned, I was doing acquisitions, the realtor, and I'm trying to put this together. And actually, so which is when I came to you guys, is someone's like, why are you doing turnkey? You've already been doing summits for a while. I go, that's exactly why I'm doing turnkey. I said, I like this. This is actually fun for me. Like, so my wife will get stressed, or my mom it's business, I can take care of it. I want to treat people right. But I'm not going to get overly upset about, you're going to have a vacancy. You're going to have an eviction for most people. You're going to have a major capital expenditure, and you just learn how to plan on that, right? And you're going to have a hurricane. So I have Hurricane Helene, knocked out one of my houses, flooded it, and it's currently being gutted and renovated. And then my contractor says, we're evacuating because Milton's coming. And Milton came, and took out a different one of my houses. Both of which, these are properties I owned before in Florida, but because I had the Akron properties and the Alabama, I was diversifying. I want to be in 3 different markets with, good diversification. This month, where I would have been in the red, it's lean because I'm waiting on insurance and other things, but the other properties are carrying me while I deal with these other crisis. And that's part of why you want to be diversified. And that's part of why I think, people want to talk to you guys again. They didn't hire me to to say, but when you've done this, you go, oh, I see how they put all the pieces together, and everybody should get their reasonable kind of remuneration, but it's profitable for everybody along the line. It's a win-win-win in my mind. So the acquisitions and the team there, and then how things are structured in terms of loans and financing. I'm not supposed to say, I'll say North American Financial has been a huge partner, and I've worked with multiple lenders. So I think part of why I appreciate the turnkey stuff is because I've done the other things on my own, and I know how much time, effort, energy, and risk is involved there. And I just wanted to mitigate some of that.
Yeah, that's great, Alex, and thank you for sharing that with us. There's so much to unpack there.
Yes.
No, that's good. Like, look, we want to have you on to pick your brain. This shouldn't be Adam and I talking. This should be us listening to your story, which is really intriguing. But there's just so many things I just want to reiterate. And the big thing when I listen to you speak, I hear about, like, you talked about the why, just the mindset of it. Having that abundance and that go-giver mindset. A lot of people in real estate, they can be hyper-focused on, as you mentioned, the money. And yes, that's a key factor, but like, what is that money for, right? You can make money in a lot of different ways, but real estate, I think, is a strategic way where you can, be smart with money, not like from a tax side, from an income side, from an investment side. We build wealth because you've been doing different things in real estate over time. You've been it's interesting to hear someone, because this is usually not the case, but oftentimes we do get people that, have had previous experiences with real estate, good or bad, that are interested in investing in turnkey new construction and build to rent across different parts of the country for whatever purpose serves them. But it's a common story here. Like, yeah, this is a lot of work, and I'd like to continue to expand my portfolio efficiently and effectively and diversify it because of the reasons that you mentioned, and that's why they're here, and that's the purpose that we serve to help them. But yeah, lots of good stuff. So just to be clear, though, I want to dive in a little bit deeper on some things that you talked about. Let me just make sure I understand this correctly. You've been managing your own properties. You've been acquiring some dilapidated houses. You possibly had some underperforming assets with maybe ones that family members didn't manage appropriately. Like, you had a lot of cleanup to do with some existing portfolio, but you were still acquiring more assets. It sounds like, on your own journey, you acquired some small multifamily in Florida that ended up being affected by the hurricane. But did I hear you correctly to say that some of the properties that you acquired through our network of rent to retirement in the Midwest, some of your Alabama, your new construction, like that helped to balance out the issues that you had with the properties that you previously acquired that had insurance or had hurricane issues? Is that correct to say? I mean, can we talk a little bit more about the importance of diversifying, and did you intentionally go about it that way? I mean, right now is a perfect example where you can see that it's really important to not have all your eggs in one geographic location. But can you talk a little bit about, like, was that intentional, and maybe speak a little bit more to the importance of diversifying and building a larger portfolio?
Yeah, that was intentional. I was going to be in 2 markets, and so I've read a number of books. I've listened to different people, but I'll just say too, the Academy info is it's a great, succinct. Again, it systematically kind of puts it out there for people. So one of the things, Zach, you said that I thought, okay, that's the thing. And I was going to go with, I live in Michigan. We are one of the great states. So we have all the fresh water. People often don't, they think, they don't have any idea what's in Michigan, So anyway, and we go to Lake Michigan. We love it. So I was going to be working in Lake Michigan. I actually bought a property in Michigan. And but I was trying to help my sister. So one of my commitments to my dad is I would help every one of my siblings get established, and I would even manage some of that for them as they slowly took over if they were willing to do that. So my sister and I have done some things anyway. So I was going to be in a couple of markets, but here's the thing. This is what I appreciate about you guys. So I'm on Bigger Pockets. I'm reading all the stuff on market analysis, because I knew the Florida market. I kind of grew up there. I lived in that. I knew the demand. I had a real good sense of the metrics and dynamics down in that Sarasota, Bradenton market, Tampa. And it was continuing to grow. It's a burgeoning market. But how do you study a whole new market? And I'm going, how do I do this? And I'm looking, I'm rooting around. On Bigger Pockets, okay, and everybody's got their top 10 markets, and you're looking for, again, some agreement around certain things, and but you guys, again, you've done you've kind of put the cookies on the bottom shelf. Like, it's like, okay, the Akron market has been a consistent performer. It's got good, rent price ratios. It's got demand. It's got a diverse economy. It's got affordable housing. It's a rent-friendly state. I mean, my insurance in Akron just kills me.
in a good way, right? It's so low.
It's like I'm paying. I just paid. I'm paying $500. I got a group insurance policy because of the guy there. So now I have all my houses on one policy, and I want it's 1/20th of my cost of insurance for my Florida house, that one duplex. So just to put it in, and then taxes. So people are like, well, the house. So you guys did all the math on that. You already, and I'm like, why am I trying to do all this on my own? I've done enough work to know when someone knows what they're doing. And so I was trying to diversify. I was going to do Michigan and Florida. As I looked more, I thought, Akron's good. I'm going to do that. I like the kind of growth trajectory of that triangle down in Alabama, where, Atlanta and Huntsville and Birmingham, I think it is. And I have one there, and I'm looking to add a couple more there. So I was looking to diversify. And one of the things you said, Zach, was, that I thought, that's a good catchy 3 to 5 houses in 3 to 5 markets. And I thought, that's a good diversification plan. Originally, I was thinking of 2, and I thought, no, why not? If I have good teams and have good acquisitions and and I have good software where I can be able to be aware and responsive to whatever's going on in those different locations. So that kind of was a tipping. I thought, I like that. I'm going to go that way. And so I intentionally branched out to Akron. And then I was going to work on Alabama next and decide what percentage of my portfolio I keep in Florida, because as anybody who's been in Florida knows, it's been the appreciation down there has been off the charts. And my houses are buying houses. So that's the other piece of the kind of, most people take too short a view of this, and they're not looking at 5 or 10 years. And if you can have a 10-year view, I hate to say it, but it's kind of boring and simple. I love it, but it's like, you just have to do the thing. You buy one property a year, right? But then, so what I did with my Florida houses is I refinanced, pulled out the equity, and I bought 3 to 4 more from one house's equity now between Akron and Alabama and Florida.
Want to take your real estate investing to the next level? With Tardis Wealth Strategies Income Snowball, investors are scaling their portfolios faster, accessing deep discounts, and building more passive income without tying up all their funds. For over 20 years, Tardis has helped thousands reach financial freedom, turning real estate dreams into reality. Imagine growing your cash flow with ease and acquiring properties in any economy. Book your complimentary strategy session with Tardis Wealth Strategies by visiting renttoretirement.com/TardisWealth and discover how to optimize your real estate investments.
I want to dive in, and I know Adam's got some questions, so I don't want to be too selfish here, but just to every time I listen to Alex, I'm like, I want to talk about that, not that. Yes, no, it's good. Again, this is, we want to pick your brain, but the 3 to 5 properties in 3 to 5 different markets, about economies of scale in a certain location. You want a footprint there, right? You don't want to own 20 properties in 20 different markets, but to your point here about just what happened with the recent hurricanes with some past properties you had, like, you got to have diversification, but that's true on the positive side too, right? Because some of these sleeper markets or these secondary markets, like, they have a huge trajectory. If you look at what's kind of happening in the local economy, like Adam and I refer to those as the lottery ticket properties, where you own a property and that, you just bought for cash flow or whatever, but it happens to triple in value over time that you would never expect. Like, that stuff happens, and you only need like 1 or 2 of those to really make a huge positive impact in your financial position. But you have to get out there and own the property first, right? You got to buy, you got to diversify. And so this is all really key fundamental information. And you've been through the process already. Like, you see the light at the end of the tunnel. You've already had this horizon where, like, a lot of people can't conceptualize that because it's not tangible yet. It's just in theory for them. But you've actually, you have empirical data that shows this is how real estate works, which, I went through like the 5 main things that have allowed big, wealthy people. We've interviewed them. And when I look at my own experience, it's like starting to invest and just starting and continually investing over time, maximizing all your resources, utilizing all your resources, whether that be HELOCs, partnerships, equity, and other property you own, right? Number 3 is actually specifically reinvesting your equity through selling in 1031 exchanges, or actually going through and doing cash out refi like you did, because that's a non-taxable event, and then of course things like maximizing tax benefits and then building your team, or the other pieces of that. But you're already applying all this, and you see that all these are working. And then of course you built a solid portfolio in Ohio. Now you're buying some new construction in Alabama, and sounds like those are going well for you. But a lot of interesting stuff to unpack, Alex. I'm curious to hear about the academy experience, because you're someone who is already like you already have experience. You have a good idea of how real estate works. We know that Academy members are more successful long-term than non-Academy members, but you don't have to be an Academy member to invest with us. I'm just curious, because you've had some baseline experience versus a brand new investor, what made you decide to join the Academy, and what are some key things you've taken away from that?
Well, I think, can I say numbers on it? So I whatever, it was 4,000 or 39.95, whatever it was. I've already made back $7,000 or $8,000. So I'm in the black for joining the Academy, part of that whole, the partner program, and $1,000 per house. So, but part of it was, so you learn. You're one of the things my dad would always say is everybody's standing on the shoulders of those who've gone before them. And we love to portray the myth of the self-made person. And I'm not knocking that. I mean, people would say I am that in certain ways and others, but the truth is we all had people who were prejudiced in our favor and who set us up for some successes. And and so we learned from them. But with my parents, and they were a beautiful couple, but the real estate was a divisive thing. And so I joined the Academy for two reasons, maybe three. One was I knew it would incentivize me to get my money back. So I was going to buy my first 4 houses and get the $1,000 rebate. So, if you study Atomic Habits or some of those things, right? Creating certain incentives, rewards, goals. Everybody does better when they have a goal. So that's number one. So buy your first property. If you're listening to me, I'm just telling you, the only mistake you'll make is by sitting there listening, going, I got to learn more. Yes, you do got to learn more, but you're not going to learn it if you don't own a property, because experience is half the teaching. And if you don't get in your feet wet, and you guys are kind of like, you guys are the guardrails. You kind of lay out a path for people. So anyway, and my wife said, don't you know this stuff? You already know this. I'm listening to this stuff and you've talked about this. I said, yeah, but we need to listen to it because it's going to make me better. And I want you asking good questions so we're on the same page, because I don't want to be in the different places on this journey. So it helped us grow together. And then, there's a proverb that says, those who walk with the wise grow wise, but a companion of fools suffers harm. And, kind of the big idea of that proverb is, show me your friends and I'll show you your future. So you got to get into communities where people they're going where you want to go. And there's a momentum in that. There's a nutritious kind of engagement that spurs each other on, that doing it on your own, you can do it. And I've done it for a lot of years, but I'd rather be kind of prompted and spurred on. And every time I listen, I go, just because you think you know something, you don't. Let me just say that. I'm like, oh my gosh, you know what? This is so relevant today. Whereas when I heard this 3 years ago, it didn't register with me. So, part of my background is in teaching, and that requires multiple exposures. And so seeing something, hearing something, doing something, and then gaining feedback. So that's the mastery loop. So, hey, how you doing on that? So, I've talked to my rep at RTR or some other people. I'm going, yeah, I'm not sure about this, but those conversations are helping get good feedback on what's working, what's not working, and how do you continue to improve?
Yeah. A lot of our investors are kind of at the stage where your grandmother was, where they're the first generation of investors. And you talk about kind of what you did, but how did they bring you into more than just the mowing lawns? How did they introduce you to the, dealing with the financial side and dealing with the tenant side? Because you're obviously, well, not obviously, you're probably not having the 12-year-old go knock on the door for rent over the summer as well.
Maybe my grandma.
But how did you get introduced to the financial side so that, some of our newer ones who want to install this, instill this knowledge onto their kids and pass it down generationally. How did you see that done successfully in your family?
Well, again, more is caught than taught. So thinking about how can I bring them along? So my grandmother brought me along. We're going, she's taking linens or some silverware. She's helping this household set up. This is back in the day now. Okay. This isn't today. She's taking dishes to the house. I'm going carrying the dishes in. I'm meeting this family. Now she was on site and she was this beautiful mixture of gritty truth, but compassion. But you weren't going to put one over on her too many times. Yeah, she was a tough lady. And so just even in seeing that, Adam, and one of the things I knew is it was the lesson. It was like, this is how she did it, but this is not what I want to do. I don't want to be having those. Like I have several friends. I have a brother-in-law who doesn't want to touch real estate. He can't believe I'm loving this. He's a great investor because he had these kind of emotional, visceral, kind of bad tenant. And so if I can tangent off for just a minute. I mean, I think that this is so. Robert Kiyosaki talks about the cash flow quadrants, and basically on one side, it's on you. You're the employee or you're self-employed, and you got to do the work all the time. You're grinding it out. You're fixing the toilet. And some people, they like that. God bless you. And the other side is you created a system that allows you to have income now that is disproportionate to your time investment. And you've hired other more competent people to manage those things for you. So to me, one of the things I learned is I don't want to do this. I want to have a team. I want to have property manager. I want to be able to hire vendors who know what they're doing. I want to have the accounting systems. I don't want to be keeping every receipt like this. And so I got invited into it. And by doing it, I thought, I like the building of the business stuff. I think I'm pretty good at that. I'm an entrepreneurial person. And I don't mind hanging drywall or painting a room because I did all those things. But I'm not going to be the first call. So I took it from I got to do it all. I'm getting the late night call. I'm the one who's angsting over the rent not paid too. I have a system and a team. And back to what you guys do, this is again part of why my brother-in-law said, "Why are you working with another company?" I said, because they've already vetted all these different key team members I need. And yeah, someone may or may not work out, but that's part of the deal, right? But if you got 80%, that's very different than starting from scratch at 0% and you're having to build it all on the ground. Now, if you don't have anything else going on, then you may like that. But so I saw them do it all, and I saw that was the burnout factor for several of them. I knew I kind of had the gritty perseverance factor. I wasn't going to get too upset. But I wanted to systematize it in a way so that, I was making, as Robert Kiyosaki says, you're making money when you sleep. And it takes some work. So people think of passive income and they misunderstand what that means. But the number of hours I put in compared to the resources this provides, it's not even close.
Yeah, I like to think about kind of like the end goal and going back to like the why aspect of it, because a lot of people, when they first, and myself included, when you first embark on real estate, it's a lot of it's you're encouraged to do a lot of the DIY, right? And I actually, even though there can be some lessons that we can take out of that, like I felt like almost to some degree it set me back a little bit, because I just felt like long term, if I would have been able to do more earlier on and implement teams and systems and people earlier on to be able to like just build a better business and a better process. I'm just talking about my buy and hold portfolio. But if that allowed me to spend a few more hours focusing on the things that actually matter instead of trying to handle every aspect of the business, and by virtue of acquiring more assets, like I probably would have been further ahead, I think. But if you look, and that's okay to start that way, right? I mean, school of hard knocks sometimes is, you just got to continue to refine the process and invest. But if you think about the end goal, it's you can make money in real estate a lot of different ways, and you can own own a rental a lot of different ways. You can earn active income a lot of different ways in real estate. But at the end of the day, it's like, how do you build a sustainable portfolio in good locations, good teams across multiple markets? It's like the quicker you can get to there, however you do it on the front end, whether it's turnkey, BRRRR, like whatever the case is, the quicker you can build this sustainable portfolio, that's really going to be the ticket that's going to, I think, drive wealth long term. Would you agree with that, Alex, or you have anything to add to that?
Yeah, let me just throw this in. And Adam, I know you asked this question. So actually what I'm trying to do with so I have 6 grandkids, and part of my goal is my previous role. So I actually have left my previous role again. So I'm retired in some respect right now because of this. But there is no retirement in the kingdom of God, we say. So I say, so it's just a matter of how do I get to serve. But my grandkids, I have 6 grandkids. I see myself as, my wife and I see that as a calling, that we're present. And so my goal is to take them to some of the different rentals and do some of the kind of grindy work I did. But with all my kids, one of my incentives for them, because I realized my grandmother and my dad were good examples, but they didn't tell me any of this stuff. Like I had so until I was having to do the finances, the accounting, starting to manage it with and for my dad and my mom, I thought, hey, how do you pay this vendor? Or how is this getting done? And so I realized I could have even extracted more from them. The thing is, they were so good at it; it was intuitive to them at that point, right? It was unconscious competence. If you think about the kind of scales of competency, they just were good at it, and they knew what they needed to do. So I'm going to just give you props on the wealth calculator too, because I have this really ghetto Excel spreadsheet where I would do my projections. And that thing right there is worth the whole trip. And if people haven't got the wealth calculator, so I'm sitting down with my kids and saying, I want to help you start to build this now with me. So my initial offering invitation to them is, so let's say we can get into a property in Akron for $36,000 down or less, because actually, all those pro formas are based on a 25% down payment. And with the right lender, you're still putting 20% down. So I actually bought more than I thought I could, because I was like, oh, I can buy 5 instead of 4 because of putting 20% down. My promise to them is I will go in with you on your first 2. So we'll go 50-50. You'll buy me out, and then we'll go 50-50, and you're going to run it on your own, so that if and when you get some of these other things, you've already got this flywheel running, and I'm helping you understand how it all works. So we're doing kind of the process, and different ones of my kids are in different places. My youngest daughter, because she just got married, just house hacked in Indianapolis, and we went in on that with them on a duplex, and they're kind of on their way. But because they're the youngest, the other ones have kids, and doing some of these kinds of things is a little more challenging. So one of my other kids is saving up their 18 grand right now, 20 grand for the initial kind of purchase. So I'm trying to be more cognizant and intentional with them in terms of letting them in and seeing things. And for sure with my grandkids, I'm going to do that.
So not just taking them by and forcing them child labor to paint the house and tell them they're going to be gifted the house, but actually going through the mindset, the investing side, the money side of it, and kind of running the math. I think that's a crucial part as well, right? To really understand this. But I love that. Thank you for sharing that with us.
But don't get him wrong. He still, when there's a vacancy, he still throws them in the back and makes them mow the lawn, right?
Yeah. Well, here's the thing. One of my dads said, you need to work this job right now, because then you'll understand why you need to have other college education. Back in the day, it was like, go ahead and work that job, and you do it for 5, 6, 7 years. And we're in Detroit, so working on the line it's a great way to work, and people do it. But you paint enough houses, or you scrape, you've done it. So there's an incentive or understanding. You have the work ethic, but you also then have the larger schema of understanding, oh, this is how this whole thing fits into a business. And I don't have to do this, but I can if I want. And I can choose to do pieces that I might want to do, but I don't have to do them because I've worked kind of the whole plan.
Yeah, that's awesome, Alex. Well, thank you so much for sharing your story. I guess just kind of in final thoughts here. Again, you've been someone that's been around real estate. You've done a lot of different things. You built a diversified portfolio. You have your investing with your kids. You've gone the turnkey route. You've gone rehab and new construction. You joined the academy. You've just done a lot of different things. What piece of advice or a couple pieces of advice would you give to someone who doesn't have that life experience that you do, but still sees the value in investing in real estate? They may or may not have acquired their first property, but they're looking to do more into real estate. Of course, they got to get out there and take action. We know that. But what are some key mindset things or other things that you can think of that for someone that's just stuck in that spot, either getting their first deal or learning how to scale and take it to the next level? Any pieces of advice through your own experience you can share with that to those individuals?
Yeah, get around people who are doing it. Again, show me your friends, I'll show you your future. Who's someone who's not, there's plenty of naysayers and there's a lot of anxious people.
Yeah.
And they're going to always be anxious. Oh, you could lose everything. And, don't be stupid. But you have good people who can help you. And, again, this is why I signed on with you guys. Follow the plan, do the academy, and then say, I'm going to earn my money back, because you got to buy your first house. You got to buy your first house. And, you could do the solo. I don't have that solo directed IRA, right? What's the SD, the one where you can invest now?
Self-directed. Yeah. Or
self-directed.
Okay. Yeah.
If I were 30 years old today, I'd put my money in that thing and do that. I'm still looking at that because it's so appealing to me. But if I were young, I pulled investment money to buy a house because, so the couple of things are the academy kind of gives you one cohesive pathway. If you're on Bigger Pockets is like home, and it's a great place. I've learned a lot from people, but it's like Home Depot. You're like, I want to go, what do you want to build? Well, it's all here. And in some ways that can create kind of analysis paralysis, as opposed to, shiny object syndrome is what people get. It's like, pick a lane, pick a single family lane, pick a duplex, and just buy your first one and put blinders on. Commercial real, all this other stuff. Don't get distracted. Buy one. And guess what? If you want to get into wholesaling or other things or flipping, then do it. But this will be the quickest way you're going to see most of the business without getting analysis paralysis. And I'll just say this, and most people don't pay attention to this. And actually, Zach, I feel like you do a really good job of explaining this to people with the fivefold. Real estate will give you a fivefold return if you're just in a good market with a good house with a good team, and compared to the stock market. And my brother's a day trader, and he makes money. He makes good money, and he's constantly going, "You should do this." I go, "You sit in front of your computer all day. You love it. I love you, but I am never going to do that." I said, "I want to live my life, man, and I don't want to compare returns, but I will, because I'm not, but I don't want to do that." So you're going to make a lot more if you just make and you're making good conservative investments. This isn't highly risky stuff. There's risk involved, but you got to buy your first house. You got to get around people who are doing it. And I would argue, don't listen to every blog or everything else, This gives you guys, and there's probably other places, but this is one continuous stream of clear thought on how to begin and how to work the whole process. And I have found that to be very helpful. And there's books that will do that, but why not listen to the videos and do the exercises? So,
all right, well, fantastic, Alex. We really want to thank you for coming on and telling your story. It's always great to hear where people came from, and not only that, but where they're headed, and pulling others along with them. So thank you for inspiring the others. If y'all want to see the inventory he's talking about, you can head over to renttoretirement.com. That's renttoretirement.com. We don't hide anything. It's all there on the website. And if you have any questions you want answered in future episodes, or if you want to tell your story, email podcast@renttoretirement. That's podcast at Rent to Retirement. Alex, again, thank you for joining us today. To everyone else, thanks for spending the time educating yourselves today, and we'll talk to you on the next episode.
Great to be with you guys.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.